Okay, Rudramurthy BV also joining us this morning, giving us a for giving us a perspective of what he's or how he's viewing markets. Rudra, very good couple of days, right? We've had in terms of the trade, nice short covering, especially on the large cap basket that we saw yesterday. Mid and small caps, well, the participation was slightly more muted just compared to the large caps. The breadth was extremely strong there. How are you viewing the market?
Good morning. Thanks for having me in the show. See, market is definitely stuck in a range. Yes, on one side you have positive expectations like more relief can come from government in terms of the FII taxation, which has been a very big dampener for FII flows to come strongly back to India. But then if some news comes on those front, especially even on equity, not just on debt where the rumors are coming out, so if that happens on the weekend, yes, you can expect markets to move up sharply. But then market has been very stock specific. At index level, it has been too volatile, broadly following a range of around 23,600 on the downside. And on the upside, yes, you have resistance kicking in at 24,200. So for me, both at Nifty and Bank Nifty level, it has been more a sideway to a consolidation phase. Time-wise correction is what market is looking for. And at index level, you may not see good opportunity and trend is too volatile, whereas stock specific moves are definitely seen. And even sector wise, if you see, yes, except IT, which has been a big laggard for a long time, one should definitely not catch a falling knife, especially if you're a momentum trader. So except for IT, look at other spaces like, for example, metals where we have relative strength. And you can also look at power and energy as a theme, and even gold finance companies like Manappuram Muthoot looks very good to me. So you have to be very choosy. Pharma looks very strong to me again. So whether it is metals, pharma, select gold, NBFCs. So these are a few of the themes where market shows relative strength, and one should definitely avoid IT and be very sector specific and stock specific in market. Wait out for some of these news flows to come out, and if there is support in terms of the rupee fall which government is trying to hold on, and if market gets any FIIs kind of a good theme and FII starts buying this market, then yes, you can expect a sharp rally in index.
I want to quickly mark out one stock in particular, KRN Heat Exchange, a revenue
hike. We have Rudra. Rudra, how do you look at some of the OMCs at this point in time? HPCL, BPCL, IOC?
See, any up move if you get on these stocks today, definitely I will look at exiting if I have. And no doubt in terms of valuation, you might have comfort in OMCs, but then still the expectation versus the actual news flow in terms of the petrol diesel price hike may not be so good for these stocks. So for me, it is like catching a falling knife, and I don't want to buy them. In fact, any bounce on any of these good news you get on OMCs, as a trader, I will definitely look at an exit opportunity. In fact, if crude oil prices remain higher and you are not getting equivalent rise from the government in terms of petrol diesel prices, the losses what these companies will make will continue. So for me, this quarter, especially the earnings, if you even see, they might definitely come out with losses. And even technically, if you see any bounce in these stocks, for me is just an exit opportunity or good to go short on.
Kunal, upstream companies, ONGC, Oil India?
It's good because the Nifty is still holding on to that 23,700 mark. There's been a huge or a major build-up of put writers that's probably hopefully supporting the index. And I think if that trend persists throughout the day, then you might look at the index slowly and gradually trying to absorb the initial selling wave, especially on individual stocks, and trying to show signs of recovery. It's also good to see many of the IT stocks starting to show signs of a bounce back, which means potentially the markets would continue to be even to a short covering mode across various sectors and stocks. In terms of opening trade, Power Finance is something which starts to look a little bit more better. The stock is trading above the 50-day moving average, something which I would recommend to buy specifically above a breakout of 450 levels.
Okay, that's the take right now on what are the stocks which are looking interesting. But Kunal, this move on IT, the fact that it's actually the leadership index today as opposed to banks are the laggards. Does this trend, or rather what does this trend tell you about the markets?
So it tells us that the markets are continuing to be into that short covering mode, specifically all these individual sectors which have been underperformers. The positive sign could probably emerge once these stocks confirm minor degree swing breakouts. For example, TCS, which has been a huge drag to the overall IT index, Infosys, Wipro, I think the three names which have been acting as a concern for the Nifty IT index, if they start to show signs of, say, slight bit of more recovery, at least 2-3 days of a consistent price uptrend, where these stocks recover 4-5% at least from their previous swing lows, that's where we may ascertain that the first degree of short covering could then convert into a long built-up formation. So the initial signs are positive. Let's hope the stocks and the sector sees a follow-through.
Rudra, what's your take on how we've started off in trade and any stock-specific ideas you may have for our viewers?
See, for me, for very, very short term, if you see, especially Nifty, I wanted to close at least about 23,800 to 24,000. So till then, yes, I will avoid index long trades, but I'll be very stock specific. Delivery is one stock looking very strong to me at current market price. So I will be a buyer in delivery. It can move towards that zone of 500 and one can have a stop loss at around 470 for the long call on delivery.
That's a call coming in on delivery. Rudra, Kunal, both of you, thank you so much for your time today. We'll let you go on that note.